Hey everyone, Mark Rusin here, back for another video. Hope you are all doing well. We are growing this community at a rapid pace, and it has been so great to connect with so many of you as you comment or you email me or even reach out to me on social media. I'm on Twitter and Instagram as well, so if you haven't followed me, make sure you give me a follow there, as well as I'm sharing content on a daily basis on those other social media networks. So far, the month of October has been a welcome sign for many investors as we bounce off those lows that we saw in September. The S&P 500 index is up over 6% so far this month. As I'm sure you've heard me mention multiple times on social media, to build wealth over time, the key is to have multiple income streams. And one of those income streams that you can have it in your sleep. That is dividend income, building passive income through dividends. It's simply investing in a stock that pays dividends, and you can earn income in your sleep. No matter if a company goes up or down in share price, you can count on that dividend. As long as a company is performing well and getting the cash flows to cover that dividend, you have nothing to worry about. There are obviously risks out there, as during the COVID times, we saw a lot of REITs that had to cut their dividends because tenants weren't paying their rents and they weren't able to cover the dividend for a short period. Many have re-established that dividend, but those are risks to be cognizant of and be aware of when investing in dividend stocks. But for the most part, as long as a company continues to perform up to their expectations and up to their guidance, you can count on that dividend. And quarterly dividends is the most common form of dividends. But in today's video, I'm going to talk about monthly dividends. And I'm going to discuss two of the top monthly dividend paying stocks that you can invest in today. Not only are they high quality, but they will pay you a dividend every single month. And who doesn't love seeing that dividend come in every single month? So make sure you watch all the way through the video as I dissect both of these investments to see if they fit your portfolio. And with that being said, let's jump in and start earning some monthly dividends. Before we get started, as always, everything shared in this video today is for educational and informational purposes only. And if you are just getting started, head down to the comment section down below where I've put a M1 Finance link where if you open an account, they will give you $30 free to get started. All right, so the moment you've been waiting for, let's hit the ground running with one of the most popular, the most popular monthly dividend paying stock, and that is none other than Realty Income, stock ticker O. Realty Income is a real estate investment trust, otherwise known as a REIT. And if you're unfamiliar with REITs, I did a video which I will pin right up here for you to go back and watch and kind of just remind yourself what REITs are and what makes them special in a way. REITs have the ability to not get taxed at the corporate level, as long as they abide by a few set of rules, such as investing in real estate assets, gaining a majority or 75+% of their income in real estate related activities, and one of the key items is paying out 90% of their taxable income in the form of dividends to shareholders. And that's one reason that you see REITs have such high yields a lot of the time. But when it comes to Realty Income, they've actually trademarked the phrase the monthly dividend paying company. That's what they refer to themselves as. That is how dedicated they are to paying a monthly dividend. Checking out some of the stats when it comes to Realty Income, they're one of 65 companies that are within the S&P 500 Dividend Aristocrat list. This is a very prestigious list for companies only that have raised their dividend consistently over the years. They're also a top 10 global REIT in terms of size. The company has seen a compound annual total return of 15% since going public in 1994. And when it comes to consistency in terms of increasing the dividend, Realty Income is one of the best. The company has increased their dividend 26 consecutive years. They have also paid over 610 monthly dividend payments, increasing it 95 consecutive quarters. That is a dividend increase for 95 consecutive quarters. We're not even just talking about annual increases. This is quarters. In order to be able to pay out a dividend like this, the company must be backed by high quality properties. One thing that Realty Income has is high quality properties that are in high demand. And they also have a very strong, robust tenant base. In fact, over 50% of the tenants that work with Realty Income are investment grade tenants. Let's take a look at some of the top tenants that you may have heard of. 7-Eleven, FedEx, AMC, Regal, Walmart, Lifetime Fitness, Home Depot, CVS, and Kroger are just a few of the top tenants that are probably familiar to you. The company has over 6,700 properties that are within 58 different industries. Based on the company's most recent quarterly report, they have an occupancy rate of 98.5%. Now, if we zoom out over historical, you will see that the company has never dipped below an occupancy rate of 96.6%. Now think about that for a moment. Out of these thousands of properties that this company has owned over the years, they have never seen an occupancy rate dip below 96%. Now looking more at the diversification of the properties that Realty Income owns, you will see that the highest percentage of revenue comes from convenience stores. Next is grocery stores, drugstores, dollar stores, health and fitness, and theaters. Now, if you look at those top four, these are all areas of need. They're very recession resistant. As I mentioned at the start of the video, October has been a great month for stocks, and Realty Income is no different. At the end of September, Realty Income closed the month at $64.86. Fast forward to today, as of this recording, and Realty Income trades at $73.87. That is nearly a 15% climb through the month of October thus far. Next, let's take a look at Realty Income, the stock. The company currently yields a dividend of 3.95%, so you're nearly getting 4%. However, the company has been on a tear, so it was recently over 4%, but since the calendar flipped to October, shares of Realty Income are up nearly 15%. Here we can see the company's dividend summary where we mention the yield, and the company has had a 5-year dividend growth rate of a little less than 4%. Now, some of that is skewed due to COVID when the company wasn't able to increase the dividend the way it has in the past, but generally, being that they pay a monthly dividend, they increase it on a quarterly basis, you will not see massive growth every year, but it is great to have a high quality portfolio with high quality tenants and know that you're getting a high quality dividend that is safe and backed by a strong business model. The second monthly dividend paying stock we're going to look at today is Stag Industrial, stock ticker STAG. Now, when it comes to comparing these two companies, obviously Realty Income is probably a REIT you've heard of. And if you haven't heard of Stag, it's because it is a much smaller company. Realty Income has nearly a $30 billion market cap, whereas when it comes to Stag, they're closer to $7.2 billion, so much smaller. As you may have guessed, Stag Industrial is an industrial REIT. The company owns more than 100 million square feet of industrial space, which is made up of 500 individual assets. As you could imagine, e-commerce has boomed since COVID hit. Even before COVID, e-commerce was already projecting to be a larger piece of the pie when it comes to retail sales. As of 2020, online sales accounted for 16% of total retail sales, which is up from 10% back in 2017. Now, if we look at estimates moving forward, e-commerce sales or online sales are expected to account for 22% of total retail sales. Now, that growth is huge, and that is massive growth over those just few short years, because when you think about it, 2023 isn't that far away. However, when you think of the whole scheme of things, still e-commerce will only account for 22% of total retail sales. That tells you the runway of growth that is left in this e-commerce boom that we are seeing. For example, online grocery business. Before COVID, did you ever shop online for groceries to have your groceries delivered, or did you just go to a Costco or a Kroger or Ralph Smith's, whatever you have in your area? For me personally, I may have done it once or twice, but since then I have done it, still only, a half dozen times or so. But there's many out there that this is their normal going about, grocery shopping now is they just do the Instacart, or they have, Uber Eats or something for their food delivery. But in terms of grocery business alone, just your regular online grocery shopping, over the next 4 years, just 4 years, that industry is expected to grow over $600 billion in that time span. That is massive growth. And that was all just based on COVID. When it comes to e-commerce, what's the first company you think of? Amazon, right? Amazon is the leader in e-commerce and has been for a number of years. There's other companies that are making great headway, like I think of someone like a Shopify. But in terms of Amazon, they have been one of the largest drivers when it comes to retail or commercial real estate. The company owns or occupies over 1,000 warehouses totaling 4 million square feet. And I bring this up because Amazon is Stag Industrial's top tenant, and they account for nearly 4% of total rent. Looking at the company's top 10 tenants, I had just mentioned Amazon, but other notable tenants include FedEx, where they have many of their distribution centers with Stag Industrial, American Tire Distributors, and the Ford Motor Company. Of the top 10 tenants, they make up nearly 12% of total revenue for the company. Stag Industrial owns high-quality properties. Many of them are considered to be Class A and Class B properties. These are some of the top, and it is a triple net lease REIT. What this means, for those of you that are unfamiliar with REITs, means that the landlord, being Stag Industrial, passes all of the common costs over to the tenant. That means the tenant, if you sign a lease with Stag Industrial, as a tenant, you're going to pay the property tax, you're going to pay the common area maintenance, and you're also going to pay the insurance. So all that Stag Industrial does is they buy these industrial units, they rent them out, and they collect a monthly paycheck or a lease check. Shares of Stag Industrial have been on a tear, with shares of the company up over 40% year to date, outpacing the S&P 500. The company currently pays a forward dividend yield of 3.3%. Now, the growth of the dividend has not been huge over the years, but the company has paid a growing dividend for over 10 years now, and they have a payout ratio of only 71%. Now, remember, again, REITs have to pay out 90% of their taxable income. So with a REIT having only a payout ratio of 71%, that tells you that the REIT is more than well covered. It is a safe dividend. It is a growing dividend. The company management has plenty of room to grow that dividend moving forward, which makes an investor feel great about their investment, especially if it's primarily for that passive income. So as you can see, Stag Industrial is a very compelling investment. You can see the industrial area or that sector growing with the likes of e-commerce and many companies looking to fast forward those plans that they had, looking their 5-year plan. A lot of these e-commerce plans have been pushed forward primarily due to COVID. And now that, restrictions are declining, a lot of consumers are used to this online buying. So make sure you take a look at Stag Industrial the next time you do some investment research. Next, let's take a look at Stag Industrial's valuations to see if they're a compelling buy at the moment. Currently, Stag Industrial trades at a price to FFO of 22.5 times. Analysts are expecting 2022 FFO to be $2.16, which equates to a forward price to FFO of 20 times, with the company having a 5-year average of 16 times. What this tells me right now is the company is trading a little bit stretched. Valuations are a little stretched, but this is a key company to have on your watch list. Now, things have changed compared to the last 5 years with the industrial boom that we've seen due to COVID. So that is one reason to maybe give a little bit of credit to the 5-year average, maybe bring that up a little bit to that 17, 18 times, I think would be more of that fair value. Moving forward with e-commerce boom and a lot of companies just being forced to move to this, just being a regular thing moving forward for a lot of businesses. With that being said, both of these companies are very strong companies. They have high quality portfolios, they have high quality tenants, and very strong balance sheets. And combine all of that with very superb management companies. Don't underestimate a management company when you're looking into stocks. Look at their track record. How have they performed? How are their acquisitions? How are they at cutting costs and lowering expenses and increasing margins? All of this has to do with a management team and how they are directing their company activities. So there you have it. 2 top monthly dividend paying stocks to keep on your watch list. Realty Income is a well-known REIT, and then there's Stag Industrial, which is a much smaller, maybe lesser known REIT that is up and coming with the industrial boom in e-commerce that we are seeing. If you own any of these, please let me know in the comments section down below. And if you haven't done so already, please give me a huge thumbs up, as that'll be instrumental in the growth of this channel and this video moving forward. And with that, we will see you next week. Take care.